Good afternoon or good morning, depending where you are in the country. My name is Joseph Cephas. I am the Vice President of Communications and Brand Experience at the American Society of Interior Designers. It's my pleasure to welcome you to the ASID Interior Design Billings Index for November. We started this in November 2010, and ASID launched this Business Performance Index. We survey monthly about 200 firms that participate in the Billings Index. Firms included in the survey primarily are offering interior design services. While many are interior design only firms, panelists are reporting from architecture firms, engineering, and many other related enterprises. The panelists are asked to report on their current billings relative to the previous month and report on recent billing inquiries. A business sentiment question is also asked regarding how general business conditions for the interior design industry will be 6 months from now. The results of the survey are compiled and diffused, which are helpful indicators of changes in direction of economic activity. So to kick this off, first we will hear from the ASID economist, Dr. Jack Kleinhans. We'll then come back to me for a few minutes, and then we'll pass off to Eric Lynch from our research department, who will go over a few of the bonus questions that were asked. And then we'll have Q&A. Throughout the webinar, you can ask questions using the GoToWebinar software. It would appear on the side. We'll hold answering all questions to the end, as some of the questions may be answered during Dr. Kleinhans' section or during Eric's. So without further ado, I'm happy to pass it off over to Dr. Jack Kleinhans. Thank you.
And good afternoon or good morning to everyone. It's a pleasure being with you today. I'm actually, for some reason, operating without the slides in front of me, but I've got a hard copy. For some reason, my screen just went blank. But let's go forward. I think I can do this. Let's just begin basically where we are. We're actually in the middle of the fourth quarter, but we're looking back at the third quarter results for the American Society for Interior Design. But it wasn't only a few weeks ago that we received information from the Bureau of Economic Analysis on the overall economy, about 3 weeks ago. And as we all know, the growth in the economy has slowed. We're at about a 1.9% annualized growth, stronger than expected, by the way. But, you know, there's always a lot of variability around the first release. And so we'll have to wait to see in the next few weeks towards the end of the month when the next release comes out to see how close these estimates are. But it is lower than the long-term growth rate that we have seen since the recovery began in July of 2009. That's about 2.3%. So we have slowed down, but I want to assure you that we haven't stopped. The economy is slowing, but it is moving forward. This past quarter, third quarter, one needs to recognize that the consumer continues to be the driver of the economy. It had grown, the consumer grew at about 2.9% annualized growth rate in the third quarter. This compares to the 4.6% that the consumer grew in the economy in the second quarter, very much on a sustainable level. As we think about where we are with the economy, there's no doubt that the consumer continues to be the driver, and consumer fundamentals seem to be very positive as we move forward into the remainder of 2014, and I would suggest into 2020. Housing, I think, is something that we need to keep our eyeballs on because it has come back to life. Residential spending, in fact, is back. It has increased 5.1%. But yet, you know, we're seeing certainly a dichotomy between how the consumer is seeing the world and the economy compared to the business lens. There has been a struggle in growing business investment amid the headwinds that we've seen from slower global growth and certainly the trade war. One of the things that also I think is important as we are heading forward is the fact that we do have lower rates and has kicked off a wave of financing and refinancing in the housing industry. Equity withdrawals that are happening and using data from the New York Fed study from a few years ago, the largest share of liquid dollars that come from the liquefaction or drawing out equity actually goes to home improvements. And so we are seeing home housing market pick up, and it's a good signal for the interior design industry. And I think as we hear more and see more about home sales and new home sales, that'll help give us a little bit bigger a better prescription on what's going forward for the interior design industry. So on the second slide, we have outlined for you a slide that we've shown the last couple of times. This is our attempt to focus on the fact there's a lot of variability in the responses by our panelists due to seasonal forces. What we are trying to do here is actually tease out some of the seasonal activities that come and go throughout the year, and then attempt to understand why that might be occurring. Obviously, this industry is subject to volatility due to a few big and important factors that we have seen and we will continue seeing. For example, earlier in the year, we might see tax refunds that come in March and April, bouncing around though, but it does make sense that that's going to influence people's decisions to invest in their home and to purchase services from interior design firms. The blue line is the actual data, and the red line is our seasonally adjusted data. So our methodology here to measure things is our seasonal adjustment factor does seem to be picking up correctly some of the ups and downs. You might also notice that in summer months could be particularly advantageous to spending for consumers and then therefore for revenues, because that's a key time that a lot of people are making improvements to their home. And then as you get into the latter part of the year, as you can see in the November and January, it falls off. And that could be largely because billings could be pushed out to the following year, or there's limited activity, especially in housing, as the weather sometimes can push back the amount of activity that you would expect otherwise during the year. The next slide, we have a seasonally adjusted the inquiries index. It's also very common to believe that you would see seasonal forces be factoring into the decisions by individuals or companies contacting interior design firms for projects. Could also be tax refunds or other activities that are important. Later in the year, it could be that companies might be thinking about forward-looking into their budgets. So it could be a number of factors, but we felt that after 9 years of capturing this data, it was important to start to seasonally adjust it. And so we began that this past year with our first quarter report. And now if we go to the next page, we will see that the ASID survey for the third quarter presents the information for size of firms on a 3-month moving average. And again, it's seasonally adjusted. If you note, we really are going to focus on 2 cohorts in particular. The sole practitioners, which are the blue line, are staying in the growth territory, but there has been some deceleration from the previous end of quarter of the second quarter, from current reading of 50.7 compared to the 57.4 back in the end of June. Now, we also have wanted to focus on the fact that the 2 to 9 employee firms actually are showing better performance, recording a score of a 56.9 for the third quarter. Unfortunately, we do show the data, but we are not really going to focus too much on the 10 to 24 and the 25 or more, in particular the 25 or more. We don't have enough sample that we believe we can make some inferences. And in this last quarter, we had the same difficulty for the 10 to 24. So in terms of your understanding of what's going on, focus on the sole practitioner and firms with 2 to 9 in terms of looking at the size of firm. We also take a look at how firms are responding via where they are located in the United States. We've divided the country into 4 regions similar to the Census Department. And on this slide, we have the 3-month moving average of the Billings Index by region. And with the exception of the South, the interior design firms that have reported increased billings over the third quarter. The Midwest posted a score of 60. The West posted a score of 56.8, and the Northeast 52.1. But we see the South again is a little bit below, well, quite a bit below the 50 mark. The 50 mark, I'll remind everybody, is an indicator that if you're at 50 or above, you are in expansionary mode, and if you're below it, you're in contractionary mode. Now, it's kind of interesting from my perspective to focus on the South, because actually that's where the most activity has been for home sales and new homes. So I'm not quite sure how to interpret. Maybe it's a lagging effect, but there's a big focus on the growth in the South in terms of spending for home and home sales. On the next slide, I have a table that I think is also important. It's not in the chart book. This is one that we added today. And I think it's always helpful to gauge our performance against broader indicators. So this is a third quarter data from the NIPA accounts, the National Income and Product Accounts. So when the GDP came out, we can break out some details. And I like to use this one in particular because this is the amount of consumption. It's personal consumption expenditures. That's what PCE stands for expenditures for furniture and durable goods. And you can see that it had picked up considerably in the third quarter. And I think much of this increase has been propelled to a certain degree by the lower interest rates that are available in the marketplace, with the Fed that has cut back several times, 3 times this year. And I'm not quite sure whether there'll be another cut. I'm not looking for one. If there is one, it won't be till later in next 2020. But nonetheless, you can compare it to where we were a year ago and look at what was happening in 2018 Q1, Q2, and Q3. There was sizable increases for spending back then, and no doubt due to the tax cuts that we saw with the legislation that was passed late 2017 for the tax cut that went into effect the 1st of January of 2018. Now, the next slide, I have the 6-month outlook comparison. We poll our panelists on how they see the next 6 months, and we get that update, and we actually plot it in this chart along with 2 other indicators, the Dodge Momentum Index and the Expectations Index from the monthly Consumer Confidence Index from the Conference Board. The blue line is our ASID index, and it appears to be in expansionary mode for a 3-month moving average. However, in the month of September, it did dip to 46.2. So there could be a signal that things are softening or will be expecting to soften. But I believe it's probably a reflection of some of what was going on in the economic environment. We certainly had a lot of issues about volatility in the stock market, whether or not the Fed was going to lower interest rates. There was talk of recession. Certainly there's political and geopolitical tensions that probably underpin some of the attitudes that our firms, our panelists were thinking as they were looking out over the next 6 months. And this is kind of, although you can't see a one-to-one correspondent, it's kind of confirmed with the red line. The Conference Board, actually their data we're showing is for the end of the quarter, which is September. It was 95.8. For October, which we've already had a report, it's down a bit. but it is down considerably from August, where it was at 106.4. Again, this is the expectations of consumers looking out over the next 6 months. And it's off of the 12-month average, but nonetheless, I think it remains elevated, although the report by the Conference Board for the most recent two monthly reports noted that consumers are concerned about business conditions and job prospects. And then finally, we have the Dodge Momentum Index, which is an assessment by how the industry in the construction and building industry is looking out over time in terms of business. And that's the green line. It's at 143.6. It is about the same as where it was in June, but it is notably lower than it was back in third quarter of 2018. But again, I'll remind people that we're seeing positive and steady economic activity, so I think that the outlook remains positive across all of these indicators. Going back to our survey panel, we also asked them about commercial, institutional, residential sector billings and how they see the billings by those sectors. This slide illustrates the market sectors as noted. Multifamily and single family certainly have experienced some strong growth in billings since last December. I would argue that in part this is because we've had a good employment gain. We've had good employment gains and growth and gains in wages. People are feeling good about their future. Certainly, that translates into increased interest and hopefully more business for our interior design firms. Also, the institutional commercial design activities have also shown positive growth with the last 3 quarters. So the breaking it out into these 4 categories certainly gives us a different perspective on how the industry is performing. We'll go to the next slide, and this slide is in our report. We capture this residential improvement spending from the construction put in place every month that is issued by the U.S. Census. And you can see actually there's been a sizable amount of money on a regular basis. It's shown in millions, but I'm going to just do more of a bridge number. We had $175.3 billion of spending that went on in around August, and approximately the same in September. It is hard to see from the graph, but you know it's been fairly steady throughout this past 8 to 9 months. It is a little bit lower though than where we were 12 months ago, about 6.4%. But it is fairly close to where it was in May, and I think this is a good signal that people are still very interested in investing and in their homes. As I mentioned earlier, when there is this wave of financing and refinancing because of lower rates, we do see people prefer to put money into their home, pay down debt, and also to pay and improve their home. Finally, on this last chart that we have for you is the chart that is produced by the Joint Center for Housing Studies at Harvard. This report shows the annual home improvement and maintenance spending, and it actually is showing up, maybe, if you will, somewhat consistent with the outlook of our panelists when we asked them about going out 6 months, because you can see there's a fall off in their expectation of spending through the third quarter of 2020. And it's premised on a weakness in existing home sales and new construction. And that leads to sluggish remodeling activity. But I'm of the opinion that maybe when they had done their modeling, that they had not anticipated what the effect of the lower interest rate or the timing that we've seen of the Fed reducing its interest rate recently, and also giving sort of the Fed's view of how they believe they're going to kind of hold things where they are going forward. Well, let me kind of summarize real quickly. I think consumer spending is expected to provide a steady push to the economy through the remainder of 2019 and 2020. It's going to be good for our industry. Certainly better job and wage growth, low inflation, and the lower interest rates should all prove to be good consumer fundamentals. And I think that will sustain us going forward and allow the interior design sector to see some positive results. One other survey that I wanted to point out to you today was that the Fannie Mae survey that comes out on a regular basis, they actually asked their panelists on their view of expectations also, and the net share of Americans based on their survey showed that most Americans, 72%, are not concerned about losing their job, and that's kind of a very positive attitude that supports sort of the home purchase world which they operate in, which of course is very important for our industry also. And I will conclude here and turn it back to Joseph.
Thank you so much, Dr. Kleinhans. Greatly appreciate it. He always does such a great job of doing a thorough review of the IDBI. Just a reminder that you'll be able to download this on ASID.org. Download the full report in the very near future. We're about to transition to the next section. Each time we send out the survey, we ask a bonus question. And these are typically more topical in nature and open-minded, giving our panelists an opportunity to expand upon their specific circumstances. Dr. Kleinhans works closely with our research department, which is ran by Dr. Susan Chung, who is our Director of Research and Knowledge Management. And here to go through the bonus question is also from the research department, Eric Lynch, who's our Senior Associate of Research and Knowledge Management. Eric?
All right, thanks, Joseph. Again, good morning or good afternoon to all of you guys. And again, as Joseph mentioned, again, we have our kind of standard list of questions that we ask our panelists to answer with regards to inquiries, with regards to their billings, and as Jack mentioned, with regards to how their outlook is for 6 months. However, though, with this bonus section, again, we try to, again, provide our panelists with more space and allow them to be able to detail some of the more specifics that can relate to their particular business. And again, each quarter we attempt to find a topic or overarching category for each one of these bonus questions. Last quarter, we focused, for those that attended, we focused on talent and human resources. While this particular quarter, for the third quarter, we wanted to specify specifically with regards to the construction industry, investment, and project costs. Now, as we take a look here at the first slide, again, we asked our panelists with regards to kind of the seasonality of their business. As Jack mentioned, there definitely appears to be kind of what you would call like a roller coaster, an up and down movement with regards to their index and billings. And as you can see here, you can kind of get that feel by looking at the different seasons. Again, we asked our panelists whether or not the particular season was a busy, a steady, or slow period. Now, as you can take a look in the yellow section there, the steady or average period seems to be fairly consistent across each one of the seasons, again, using a variance of about 9% between each season. However, though, you can really notice a difference, say, if you look at spring and fall compared to the winter and summer months. So again, obviously it really can depend on the firm, but you can really tell from the data here that there is a bit of seasonality with regards to the amount of business that a company can experience. Now, within the comments section, we do have some firms, as I mentioned, that might not necessarily work on a quarter-to-quarter basis, but more a year-over-year or multi-year period. And some of those can also depend on the project as well with regards to how busy they are. Now, we have asked this particular question the last 2 years. And again, I know it can take a lot to look at with all the bars on the screen, but what I really want you to look at is when you go to a particular season, take a look how each one of them compares from 2018 to 2019. And again, for example, if you take a look at spring, you can see the number of panelists that mark themselves as busy, increased approximately about 7%, while in winter, the number of panelists who stated that it was a, quote, slow period increased about 10%. But if you look between each one of the seasons, there does not appear to be too much variation, that if it's going to be a busy season, it's going to be a busy quarter. And if it's going to be a slow quarter, it's going to be a slow quarter, not dependent on the year. So it really, again, gives that idea that there is a pattern with regards to some of the business that we are seeing from our interior design firms. Now, one comment that has come across occasionally within our panelists when asked this particular question comes along the idea of vacations. Now, I know a lot of us will take summer vacations either with family or friends, so that can definitely have an impact on the amount of business that might be required by interior design firms during that period. And the same thing can be true for winter as well, since we do have a couple of major holidays such as Thanksgiving and Christmas within that period, which could definitely impact the number of inquiries or billings that has a particular interior design firm. Now, again, this would correlate with some of the previous questions that we've asked, and as we move on to the next slide, you can see that our next question when we asked our interior design panelists is whether or not this will be, the next 3 months would be a good time to expand their business. And as you can see, we have asked this question the last 3 years, and there is an upward trend with regards to the number of panelists that said, yes, this is a good time for us to be able to expand. However, though, again, as you can see, it has moved up from about a quarter or so of our panelists to about a third. Again, the overall majority are still articulating that it is not a good time to expand substantially. Now, again, when getting into maybe some of the factors, again, a lot of the things that we've probably heard in the news are contributing to maybe some of this sentiment that comes with businesses maybe not wanting to expand substantially. Again, such as the uncertainty around trade, the fear of recession that we've heard occasionally, and the upcoming election cycle. But what I found interesting in some of the comments is that panelists who did not think it was a good time, and based on some of those reasons I just mentioned, also articulated that it actually was a good time for those exact same reasons, such as there, again, even though we have uncertainty, this might be the only certain time that you have, the idea that it could potentially change in the future with regards to an election. So it's really interesting to see how the same landscape can be interpreted or viewed by two different panelists so differently. I just found that really interesting to see that within the data. And as we continue to talk about investment specifically, one of the next questions that we asked is, obviously we're concerned obviously with the interior design businesses themselves, but what is it like for their clients? Do we think it's a good time for their clients to start making some of these investments, both residential and non-residential? So we wanted to see if, again, was there any difference, as Jack mentioned, between some of our commercial firms versus our residential ones? And as you can see from the information presented here, it's a pretty even split between those that mark themselves within the non-residential field, roughly about 1/3 for each one of the categories. However, there you can tell there's a huge difference now in our residential firms. Our residential clients were 6 times and about 2.5 times more likely to say yes compared to the no or not sure categories, respectively. And again, this difference in opinion between our residential and non-residential clients, again, could be explained by some of the recent economic data that's been out there. For example, the U.S. Census Bureau put out their residential home improvement spending, noticed an increase quarter over quarter to about $1 billion or 0.6% into Q3, while the non-residential building construction starts from Dodge Data and Analytics was a bit mixed for the third quarter. July and August experienced downtrends, while September was a little bit higher. So it could, again, explain some of those differences that we're seeing both in residential and non-residential clients. And again, speaking of building construction, one of the other questions we asked our panelists is whether they thought that new building construction, again, either residential or commercial, was impacting the number of inquiries or, again, project hopefuls that for a particular firm. Well, again, over the past 3 years, you can see that there still is a none or no major effect as the majority of our panelists answering. The number of panelists who answered in a positive light, you'll notice that by the green bar, has steadily decreased, while those that have more of a negative view, indicated by the red bar, is noticing an increase or almost 4 times likely in 2019 versus 2017. Now, the dotted lines that you can see there, again, is just showing the relationship year over year between panelists that responded with a positive and panelists that responded with a negative sentiment to, again, showcase the dramatic trend in that data. So, again, interesting that we were seeing this pattern, especially for this particular question, which is why we wanted to explore maybe if there were some trends with regards to the comments that our panelists left for this particular question. And as we were kind of filtering through this information, we did notice a couple of trends kind of pop through in the kind of sentiment that our panelists were expressing. Again, as I noticed in the previous slide, a majority of our panelists, again, did not experience any change or impact with regards to new building construction. So again, we did have quite a few comments with regards to that section. However, though, there were two kind of distinct themes that I'm going to say that kind of emerged from our panelists. First, clients were becoming more interested in remodeling or renovating existing space rather than trying to do new construction, which aligns with, again, some of that data that I mentioned from the U.S. Census Bureau with regards to residential improvement spending and kind of the mixed results that we've been seeing with non-residential building. Another panelist, again, also mentioned that the largest segment of the business has now changed to remodeling. And then the last bullet point that you can see there is that there appears to be a bit of what I'm going to call a crisis of conscience with regards to our interior design firms on what they want their firms to become. One side, you have firms that are wanting to kind of hyper specialize or find that niche section within the marketplace to kind of differentiate themselves from other firms. While other, again, panelists mentioned that they're kind of following what I'm calling the creation of more design build teams or kind of like a one-stop shop model where you have everything under one roof. So there definitely appears to be kind of that tug of war for our interior design firms with regards to where they land on that spectrum, whether they hyper specialize or they try to be one for everyone. So again, as we continue down from the industry to kind of more of the firm level, we wanted to kind of figure out, okay, we've noticed some of this kind of mixed information and mixed data from our residential and non-residential firms. What are our project costs with regards to that? What does that look like for them over the last 12 months? And again, consistent with what we've seen, a majority of them, again, articulated that the actual project cost compared to what they budgeted is, again, approximately about the same. But close behind it in second is they mentioned that it has been actually higher project costs. Again, a little bit unsurprisingly, again, very few panelists mentioned that their actual project costs were a lot lower than actually proposed. And again, this also kind of corresponds with data, again, from the U.S. Census Bureau with regards to their fixed priced index. Again, that takes a look at construction prices for residential homes. And that has increased about 3.5% over the last 12 months. And the Turner Cost Index as well increased 5.3% over the last 12 months, which has more of a focus on residential construction. So, and when we asked our panelists whether or not actual project cost increased or decreased or stayed the same, for those panelists that mentioned that actual project costs were higher, we wanted to know, in their opinion, what was the main rationale for the actual higher costs. And again, unsurprisingly, Approximately about 40% mentioned an increase in material costs, followed again pretty closely by increased labor cost as well. So as we explored the more detailed comments by our panelists, again, kind of like I mentioned in some previous slides, some other themes kind of emerged as well. Again, unsurprisingly, tariffs were mentioned quite a bit with regards to our panelists, as you can see on the slide there. Again, about 14% of them actually specifically mentioned tariffs in their comments. And again, as well as a lack of labor, both from a quality and quantity standpoint as well, increasing their cost, as we can see with regards to those that mark themselves increased labor costs. Now, again, since this particular question forced our panelists to choose just one option, we did have a number of panelists mention that there are more than one of these choices or options really impacting their overall project cost. So even though, again, we were forcing them to choose one, many of them articulated that more than one of these factors were contributing to the situation that they were experiencing. So again, so that was an overall assessment on our bonus question section. As you can tell, again, it's not obviously indicative of every single firm, but I hope that gives you a good feel for what some of the interior design firms are stating, again, specifically with regards to construction, with regards to investment and project costs.
Thank you so much, Eric. So we will now move into our question and answer section. So if you have any questions, please feel free to fill them out using the GoToWebinar software. Before we go to any and give the audience a little bit of chance to maybe formulate some questions, Jack, I have a quick question for you. One thing that was really talked about over the summer and that you mentioned on the previous webinar that you weren't as worried about as the news outlets were possible recession. You were not as worried about it, but it was something that kept coming up and kept creeping into the conversation. Is the possibility for a recession dead now, or is it still something that we should keep on our radar?
Well, a recession probability is never dead. The fact of the matter is that much concern of why the media was focusing on recession probability or increased possibilities, maybe that might be the right word, was the fact that the interest rate structure was cockeyed. Let me be more specific. What we had was an inverted yield curve, and short-term rates were much higher than long-term rates. So it didn't make sense for somebody to go ahead and invest in something going out in time when they would actually not make as much money if they would do it on the short run. So since the summer, we have seen that the Fed has reduced interest rates, and where they focused their activities was on the short run, that is the Fed funds rate. And so now we're getting back to a more, I don't want to say normal curve, but an uninverted curve, which I think has actually provided needed strength to housing in particular. And of course, with the fact that lower interest rates are available, we see the stock market hitting some of its historic highs. So I think people's confidence about the future, at least consumers, we have still uneasiness that's out there with regard to geopolitical tensions and trade negotiations. But I think that as the rates have changed, so has the outlook. And I never really felt that we were in a high risk for the recession because of the inverted yield curve, largely because the reason why we had an inverted yield curve, which was different from in the past. Let me just I forgot to say, in the past, usually an inverted treasury yield curve indicates the economy is heading into a recession, all right? But, you know, this most recent period that we saw the inverted yield curve is not like previous situations. We didn't have any overheating that was occurring where the Fed had to tighten interest rates. And the reason why the long-term rates were where they are was largely because that's where the U.S. Was piling on buying long-term treasuries, the Fed and then countries from abroad. So I know I'm getting into more technical analysis here, but I'm just going to argue that the lower the rates that have occurred have helped to uninvert the yield curve, and it's going to provide some lifts, certainly on the housing market and to some consumers who are looking to borrow cheaper funds that wouldn't otherwise be available a few months ago.
Thank you, Dr. Kleinhens. Well, that will conclude, with no further questions, that will conclude our Interior Design Billing Index webinar. If you have any further questions, please feel free to reach out to myself or Eric. We'll be happy to get back to you very quickly. Any media inquiries, please feel free to reach out to Lori Enseniat, who's also on the call. She is our Director of Marketing and Communications. That will be it, and we look forward to seeing you or hearing from you in mid-February. If you need anything else, please feel free to visit www.asid.org, where you can have all the previous IDBIs, and that's where we will post this one once it is available. Thank you. Have a great afternoon.